Hello and welcome to our series on financial math. We're going to start this video talking about add-on interest. So I think it's probably easiest to do add-on interest with an example, so I'll give you one here. Now let's suppose you lend a friend $600. Now you're not too generous. I mean, granted you gave him $600, but you want interest. Now until we get into those big loan formulas, we're probably going to this is probably what you would do. You'd say, okay, I'm going to lend you $600, but you're going to pay me back in interest at an interest rate of 5%. So you decide, you know what, I will loan you the money, 5%, but I want it paid back in 2 years. And the question now is, how much is that person going to owe you? Now, they can pay you a lump sum at the end, but that type of question would have been covered in my simple interest video. This one, what we're going to do is we're going to make monthly payments. So now all we got to figure out is how much is your friend going to have to owe you or pay you per month. So here's what we're going to do. Step 1. Figure out how much they're going to owe you in simple interest. So where'd my cursor go? Okay, there it is. All right, so we had a formula for simple interest, and that was I equals P R T. So let's figure out how much they're going to owe in interest. So P is $600 because that's how much you are giving them. The interest rate is 0.05. Again, you write that as a decimal. And times the number of years. So where did I say 2 years? Okay, so how much are they going to owe in interest? $60. All right, so that's step 1, figuring out how much they owe in interest. Step 2, figure out how much they're going to owe you overall. Now this would be considered the accumulated amount, okay, because it's going to be the amount they borrowed, which is P, plus the interest, and so that's going to be $600 plus the $60 they owe you in interest, so that's going to be $660. So again, your friend has the option, or I mean, you can give your friend the option of, you know what, just pay me $660 at the end of 2 years. But you know, people like to have monthly payments. So you decide, let's go and pay every month. So what we're going to do is step 3, divide by the number of payments. So there we go. We have, well, I guess we can call this payment. Okay. Now each payment, it's going to be the $660, but you're going to divide that by the number of payments. So 2 years, monthly payments, we'll divide that by 24. And that's going to be $27.50. So their monthly payment's going to be $27.50. And that, again, that's the idea behind add-on interest when making payments. Now you could change this and make, say, yearly payments, which is you would just divide this by 2 for 2 years. Or you can have like every other month, which then you would have 12 total payments. So I'd like you to try an example, which is going to be, so let's say you borrowed $1,250 at 2% simple interest. You will pay it over the course of 3 years. Now using this add-on interest process, how much would you owe per month? So give it a shot, but what you'll find is that your payment, and you'll get a payment of, should be, you'll have to make payments of $36.80, and I'm going to round to 1 penny here, so $36.81.